Hello, this is Steve Sanangelo from the SRS Rock Report, and it's great to be back doing another public YouTube video. I think you're going to find this interesting. Why are silver and Bitcoin, the prices trading together? No one's really talking about that. And also, I believe the Bitcoin price may be limited by its surging costs. I'm going to talk about that. Now, I want to start here. This is the 30-minute chart of the SLV in blue and Bitcoin in red. And unfortunately, stock charts does not have live silver and gold prices, so I have to use the SLV. They have live Bitcoin prices. But what we see here, because people are talking about, look at Bitcoin's going up, it's mirroring the M2 money supply, all these different things. But you'll notice as silver started to go up, Bitcoin went up in the same fashion, and then both of them shot up in July 11th and trended the same way, and then peaked on the 14th. Now, this is a chart as of July 14th. This is the chart on July 15th. Not only did they peak, they came down in the same fashion. And then if we look at the SLV and Bitcoin as of July 18th, Friday, it is an interesting correlation. So while we're attributing the price rise in silver to this short squeeze, which I'm going to talk about, and also Bitcoin's going up for various reasons. What I see here, because if you take the GLD ETF and you put it against the Bitcoin price, it doesn't look anything like this. So for some reason, the flow of funds moving into silver and Bitcoin seem to be pretty similar. I don't know why, but a lot of information I'm going to be sharing in the future. And one thing that I just shared with my members, and this is very important, peak net oil energy has finally arrived on the global stage. The energy cost of oil is now heading up exponentially. And I talk about that for subscribers, but this is very important because energy drives the economy. That's what we allow to produce gold and silver and Bitcoin. And so it's very important to understand what's going on with energy. If you want to check that out, it's at the SRS Rock Report website. But interesting things happening in the silver market, because I'm hearing from some people in the precious metal community that there's issues. There's a lot of silver being taken delivery, coming off the market. But really, when you look at the data, this is the COMEX registered silver inventories. They are the highest ever, going back 20 years. Almost 196 million ounces of silver is now at the COMEX register. It's up 110 million ounces in 2025, and it started off due to Trump and the tariff policies. But though silver is not included in the tariffs, but we've got an actual glut of silver at the COMEX. And on the other hand, we've got a tightness at the LBMA. And that this chart shows the LBMA silver holdings as of June 2025. There's 520 million ounces that's accounted for the ETFs. And then there's 245 million ounces for other holdings, kind of like the registered and eligible for the COMEX. But we could see after Trump was elected, a lot of that silver did go to the United States. Some we see the LBMA inventories increase a bit, but some analysts are suggesting it is a tightness at the LBMA and this glut at the COMEX that is actually part of the silver squeeze. The inventories, the silver, it's in the wrong place. And due to different factors, we're seeing this continued short squeeze in silver, which will likely continue in the months ahead. Now, I want to get back to this because it's very important. I always look at the fundamentals, even though people want to invest in Bitcoin and they make good money in Bitcoin. I have nothing against that, but I look at the fundamentals over the mid to long term. And this is macro micros Bitcoin average mining cost. And again, according to their data, on July 16th, it was about 92,600. And the price of Bitcoin was 117,600. But if you look going back to 2016, the price of Bitcoin in yellow and the cost, which is in blue, it fluctuates, but they come back and always join each other. And what do you notice over the long term? They go up together. So if Bitcoin is going to be going up to higher prices, that cost of production will have to go up with it. Now, I can talk about that because I look at the top Bitcoin miners, and Riot Platforms is one of the larger Bitcoin miners in the United States. This is their first quarter report. And they show right here what it costs to produce Bitcoin. They're selling general administrative and then their depreciation and amortization. And that's a big cost because Bitcoin miners, they last about 3 years and then they have to buy brand new ones. So depreciation is very high. So it is a cost. When you add up all the costs, 222.3 million, and you divide it by the Bitcoin they mined, Riot, their total cost came up to 146,000, well above Micro's cost, which was like 93,000. So these costs are higher than even what Micro is showing. Now you see that's kind of bad news because this is the Bitcoin stock to income, or it's also known as the stock to flow. And this is where many in the Bitcoin industry, like Michael Saylor, they're getting their estimates where Bitcoin is going to go to 250,000, 500,000, 1 million, 10 million. It's based on this halving. Now, if you look, the halving cycles are in these dashed lines. After the halving cycle, there seems to be a surge in Bitcoin, then the correction, and then the next halving, another surge, the correction, another halving, the surge, and then the correction. But something has changed in this previous cycle. Bitcoin is underperforming the past halving cycles. Not only that, it's never been below this lower trend line, when it was getting ready to take off. It never went below it. And right now at 117,000, to match that halving cycle surge, it has to get to 350,000 by 2026. And that's right here. That's this line right here. And now it's done it much quicker before, but this, just to get to the white line, a lot of times it's gone above the white line. That's 350,000 by 2026. So if the price is going to go up, guess what? So is the cost. And I don't think people get that. And one of the things with the problems that could be with Bitcoin, it's also trading like a tech stock. When Bitcoin hit a high in 21, so did the NASDAQ, because we get the Bitcoin in purple, NASDAQ is in red. Then when they both hit the lows in 22, early 23, and then look since 2025, look at that V shape. They're both mirroring each other. The US world is heading into an economic slowdown. And if we get a correction in the markets, I don't see how Bitcoin is going to disconnect from this. Maybe it will. But again, the problem with Bitcoin is costs are going to have to continue to increase as its price goes up. Now, differently than silver, I want to show you, this is a yearly chart of silver. There's a little bit of misinformation because a lot of people are, and I understand the frustration. I'm a big silver investor. I think silver is the most underappreciated. I think the asset that's going to do the best in the future. It's going to be the best performing asset in the future, precious metal. Now, silver got up to a high of 50, but that was a very brief high. But if we look at the cost of production based on my Homestake mining silver mines in 1980, it was a little less than $10 an ounce at the peak. That's when oil got up to $36 a barrel. Now, if we look at the cost today, it's about $25. And the 5 EMA is a pretty good indicator of this cost of production. So right now, the silver miners, their cost is $25 plus or minus. And I'm going to do an update for the second quarter coming out. Now, so from 1980 to 2024, now 2025, it went from 10 to 25. That's 150% increase, the cost of production since 1980, even though we've had these massive spikes. Now, if you look at my Pan American Silver's estimated break even, now this only goes back to 2004, but I can show you right now the break even for Pan America on the fourth quarter was right at $25. And they're making a $6.73 profit per ounce based on a $30.87. Can you imagine what they're making now at $38? They're making a lot of profits, just like they were back in 2011. So if we look at gold, the reason why gold is doing much better than silver, it really hasn't anything to do with silver being manipulated. It has to do with the cost of production, because in 1980, the cost of gold at the peak was $275 an ounce. It is now $2,000 in 2024-25. So from 275 to 2000, that is a 625% increase in the cost of production. And again, the yearly 5 EMA, which is the exponential moving average, it's a pretty good technical indicator to give us an idea of what the costs are. Because when I went back to Homestake mining, yes, it's one mine. They had several mines, but typically Newmont, Barrick, and all these different companies, their costs fluctuate a bit, but they all are about the same. So if we go back to 1980, this was the annual gold price for gold in 1980, not the spike. The annual average gold price was $613. Do you know what Homestake's operating cost was for gold? $276. So we had the big spike up. It came back down. Well, look at the profits they make. So this is the issue. It's the profits. So right now with gold, let's go back to this chart. With gold at 33.49, the miners are making $1,350 an ounce, or right around $1,350 an ounce. It's one of the highest profits they've made since going back to 1980s. So if we look at these two together, again, the reason why silver isn't performing as well, and I get it's frustrated, but it's really based on the fundamentals. The market is basing the price of silver and gold. It's starting to change now, especially in gold and silver. It's starting to change based on their cost of production. And so that's why silver has not performed as well as gold, because gold's cost of production has increased to 625% versus silver 150% since 1980. Now, one last thing I want to talk about, that's just fundamental about the cost of production, but I do think things are changing. What may be happening now is the financialization of the assets like gold and silver. There's so much money being printed now. I think we're seeing more institutions and money moving into to protect in silver. And so what's fascinating, India's silver ETFs it's amazing. They added 15 million ounces from 2022 to 2023. That's when it started. They added 30 million ounces in 24. And so far, 25, they've added 17. Now, Indians typically have been big purchasers of physical, especially in the rural areas. But it seems like now, as the cities get big, younger generation, instead of buying the silver, they're buying it easier in the ETFs. Now, I'm not saying that's the wise thing to do, but that silver is being now used up. It's being inventoried in these different ETFs. And the SSLN inventory, which is most of the iShares SVR, SSLN, most of it is in the SSLN ETF. That has also surged 17 million ounces in 2025. So we're seeing a lot of silver move into these ETFs, and I think that's just going to continue in the years ahead. But again, my concern with Bitcoin, if it's going to go up to these lofty price levels that a lot of the Bitcoin people are talking about, well, that cost of production is going to, as that chart shows, it's going to have to continue to increase. And that means electricity costs. Right now in the United States, the estimates are upwards of 2% of all electricity now is going to Bitcoin miners. If that's going to double to 4%, and then you've got competition with AI and data centers, I think the problem with Bitcoin is going to be the ability to continue producing it at higher and higher costs. So I hope you found that information interesting, and it'd be great to see your comments at the bottom. Thank you.